Good morning, everybody. As I was talking about yesterday, go back and look at the stream if you'd like, or the video I posted. It's pretty clear. Well, there's a few things in the chart right now, actually, that are pretty important. I'm gonna go ahead and update that to here. Yeah, and I'm gonna go ahead and turn on a few. I'm setting up my GAN fans for the day. Look, I mean, I like looking at this because it tells me where the probable points of resistance are gonna be. No one can tell the future, and every day I'm gonna talk about what I see on the charts. The truth is you could say this is kind of more for me than it is for you. Uh, it's a very rough model, obviously, but it appears that when you line these charts up like this, you get some interesting patterns, right? And you can see there's ratios. There's the fib is this ratio right here, right? It's 1 is your trend setting line. And then you go by +1 on the denominator or the... Hey, buddy. Oh, my rat's running around the room. Sorry about the squeakiness. Let me go ahead and change chairs again. That is some squeaky chairage, man. So you just got some basic ratios. 1, 1/2, 1/3, 1/4, 1/8. And that is the Fibonacci ratio. It's famous for being found all over in the world, in the natural world, and for this reason or that, humans have also decided to use it, or in practice, it resolves itself in our actions, whether we're conscious of it or not. So what you can see on the chart here is a bit of a mess, right? But it kind of, given the fact that we can see this trend here, we can actually see where the bullish bearish battle is going to be taking place, in kind of where indeed we're moving. So this is support. This is what I'm calling the accumulation fan. And as you can see, it's not a single fan, but it's actually many fans. And my models right now are visually ugly, to be completely honest, and also they are not that functional. I do not understand the math. I do not understand the trading patterns. I really, I have more questions than I have answers. But I love looking at them, and I love just kind of using them as a guide, because what we can see is there's clearly resistance at certain points and clearly support. And actually, if we take a step back, I'm going to go ahead and reload the same chart and get rid of this. There's a clear line. If we just simplify it, we can see that there is one single, let's say, line here, and it's going somewhere into the distance here, right? And so long as we're hitting resistance at this level, we can go down all the way to 0, right? And the further we go down, the deeper this is going to fall, the faster it's going to fall. But the truth is that's a really steep slope, right? I mean, that would mean within the next 9 days, we lose another 10%, right? That's 1% a day on average, without any sort of retrace to the upside, right? Which seems highly unlikely. So it's like this single line is not enough information. It's useful, but it's not enough. We can also look at it and see that, in fact, it's not just that there is a single line, but in fact there's two lines. So we can look at it like, if I am a computer, a computer bot, basically, and these ratios fit each other in such a way that they're recursive or fractal, in the sense that if you take the one, and then you take one of the smaller, like the eighth, instead of the one, this is 1 1, this is 2 1, this is 3 1, and so forth. But if you take 1 1 and then you take 2 1 of the 1 1, then you end up in a ratio that's like within this angle. I mean to say, within the original angle. If you assume the 90-degree angle then is squeezed into the smaller angle, and you can start finding these multi-layered patterns, right? That's how I look at them, because this one, if we recolor it, we can see they're not overlapping, but they're going to be each of these lines is a line of interest to someone out there, and you know that because look, the charts are reflecting it. Sometimes they pop further, but of course, if we keep doing this, if we keep lining these up, we'll find that the next one will probably hit this guy. The next one will probably hit around here, and actually you can see that they're aligned. And then the next one will hit here. And then, so within this, there is a range of the same large scale structure shrinking in smaller chunks, right? As you go further and further to lower and lower resolutions. So, well, what I actually wanted to say was, for the past 2 months, since June, we've been in a clear, unquestionable rising channel. This is what we're in right now. We've fallen out of it multiple times. 1, 2, 3, 4, 5. We bounced off here. 6, 7, 8. This is the 9th time. You could, let's say, 10 times in about, what is that? So how many days is that? Since we fell in, and you can see where we entered it, right? So in 60 days, we fell out 10 times. That's 1 out of every 6 days. That's once a week, essentially. And it's a pretty decent pattern here. Once a week, once a week, once a week, once a week. We tried, we managed, the bulls managed to pick up speed here and keep us out of it. But, but it's clear that someone out there is really, really putting resistance down on actually the other side, right? So if we, well, whatever, I'm not going to do that. But and you might wonder, okay, where is that resistance coming from? Well, there's a few places. One, there's actually a larger structure here that we can look at. And I'm sorry that this isn't exactly clear. I'm going to get it, so that I can. Oh, wait. Man. What am I doing? Yeah, anyways, the larger structure here is obvious. There's the channel here, right? Rising, no questions asked. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, we're hitting a new one. And each of these spots is where we have larger and larger amounts of volume. Here's a large amount of volume as well. We tried, the bulls are stepping in, but the bears continue to rock the boat. Or the same people who are bearish are bullish, and they're just making money right now like crazy. Because if you buy at the bottom of the channel and sell at the top, you're making 10 to 15% returns on your money every time. You just need to be able to wait a week, 6 to 8 days, right? And so the truth here, what is it? Well, we have the channel. We've fallen out again. We've clearly lost momentum. However, every other time, we've sat down here for the approximately 16, 24, 32 hours, 1.5 to 2 days, right? Asia market brought us into the red completely. All day yesterday, we were in the dumps, right? We did take a quick pop-up. Is it coincidence that we hit this pink line here? Let me show you what that pink line is. We hit that resistance 1, 2, 3, 4, 5, 6, 7, 10, 15 times on the 8-hour chart. We've hit it many of times. And it has actually, become the resistance, which now, if we can get back over this zone, and then get through 24,500 again and continue to make the momentum through the golden pocket, of course. I mean, there's a long way to go still, to be honest. It does not look like this is, it looks like a small amount, 8%, right, of a gain. But we need more than that. We need a 10, 12% gains to be able to really bounce off this line, which I'll show you where these two lines are, where they're coming from. They're super important. But we need 12, 13% from where we're at, maybe 15%, which is, again, exactly what the players here will be looking for. That's that channel. 15%, 15%, 15%, up and down, 15%. If you can do it right? And in this case, someone's playing games, didn't even let us get up there because the golden pocket is being watched like a hawk. But if we can get up there, then we can turn that into support and continue, retrace back into this this long-term resistance line. Again, I'll show you, which is present in the chart all the way back from November of 2020. Right? These lines have been in play for a very long time. There are huge players in the game right now, and someone's making a lot of money. Someone's making a lot of chaos, and they love it. It's just part of the way it works. If you can have a long-term capital risk management strategy, and you can figure out how and where to play and source funding to keep your trades liquid, there is so much money to be made. So my goal is to figure out how to do that. And long-term is the game, right? Short-term weekly moves are more likely, especially as we see them like this. This pattern is very clear. This W, for example, on the 8-hour, that's ugly. You know how many people saw that on the retail market and said, oh, W is formed, W is formed. Here's another one. If you took this one, right? W is formed. We're going higher. We're going higher. Boom! Take this huge vector candle here. Stop, hunt, loss. Boom. Stop hunts. Or stop hunt. Stop loss hunt, rather. Stop loss hunt. We trigger a bunch of liquidations at this point when we rip back down to the bottom after retail jumps in and starts really buying up large amounts as the price is going. Then they just turn around, market sell it back. They don't pay much. It's their tokens to begin with that they lent out to start with. So there's nothing for us to worry, to wonder about here. I mean, there's massive amounts of liquidity locked up in these zones here. And right now we have tighter and tighter ranges because we're bumping up against strong resistance. And I'll show you that resistance comes all the way back from, look at this, November 2020. Look, it lines up. It's not coincidence that we're hitting these points, right? These are perfectly aligned. We do have the stop loss hunts. These are the points at which the market makers are triggering massive amounts of buying or selling, depending on which direction it is over the line. You trigger that, you swap out, pull it back the opposite direction, push it back the opposite direction. Everybody that bought in down here is liquidated, absolutely crying in pain up here. All the shorts that were being built here And all the longs up here then, again, the same story. In fact, not only the longs up here, but the longs here, the longs here, the longs essentially everything right now we know is in the dumps. If it's not just me, then I am surprised, right? So what's your story? How did you manage all this? But look, you can see that the lines, these ratios play out across 2 years. 2 years. That's massive, right? We're down anytime we get on the, if we take just a single GAN like this, we can assume that the jumps between the main and the first leg, this is 1/2, and then this is 2/1, right? These are going to be large swings. Boom. And then they start tightening up. But in this case, actually, we can see that this is the same as this, but the GAN fan itself is just split into smaller and smaller chunks. That's the beauty of the golden ratio, right? It works out that there's this beautiful little pattern here. So even though it looks like a huge jump here, but everyone on the market is using this golden ratio, in my best assumption, to give them lines to trade and to predict when we switch from support to resistance, right? So we can guess at this stage, this is a distribution, like anything from the bottom, is from what I can tell, a support line. So this guy is an accumulation fan, and if you look at it from this side out into the future, it's also an accumulation zone, or an accumulation fan. But the other side, from top bottom, would be a distribution fan, as far as I can tell. But again, I'm still playing with these ideas. And as we get tighter into these lower, the smaller jumps in the ratio, as we get tighter into the golden ratio square, then the volatility is going to be tighter. The ranges are going to be tighter. And in this case, there was so much liquidity pent up that it just fell through the roof. And so many people were nervous and already deep in debt, liquidation cascading, bad news, Ukraine. It was just a mess. So there was just, everyone realized at this point, even though really this was the point, and I wish I had my own wits about me, because I should have known this was the point of no return, right? So anyways, yeah, so if we look a little closer, I mean, yesterday we see, again, I'll just repeat real quick, we saw the long-term GAN fan get tested. So whoever's been playing these since June, large amounts of capital required, sold. That means, that actually, so as I'm talking out loud, that is a terrible sign. That is a terrible sign, because they are still pushing for accumulation. They are not done yet. They rejected here, and they pushed it up to that too. It's not like this little candle came out of nowhere, right? And it was a swift rejection. We got there plus minus like 0.5%, hardly, right? And this line is there since forever, right? This is 2-year-old line. Boom, swift rejection. We did not bounce back. We turned the upcoming few week, to September kind of time frame, looking backward, accumulation fan into resistance. And so we're likely to hit 23,750 in the next 12 hours, 8 hours at least before US Brinks. We might start making some progress towards it, and then either get swiftly rejected, or we're gonna make it up and probably retouch in the next 24 hours, at least by the end of the US session. There's a high probability that we touch 24,000 in my mind. What that leaves us for in the weekend, we'll see. My hope is that we can finally start making progress back to 24.45. As I said yesterday, though, if we did fall out of 23,750, it was going to be a swift drop down, and we did lose. We did lose 3% pretty quickly. It only took, 8 hours? Basically, that was the US session. So I hope you guys made some trades that were profitable. At the moment, I was just watching, but that was a pretty clear to me that was likely. So we'll see what happens. I think what's likely today is going to be a push, as I said, back up to 23,750 plus minus. I mean, this looks more likely to be. This is too long now. Nah. This is more likely to be still something like, I think that this line is more likely to be, go ahead and get rid of it. I think we're likely to push into this. Go ahead and turn that into that. We're likely to turn into the orange line here, which is riding the resistance the whole way, since essentially August 13th, which was the beginning of the week. It has proven pretty decent, and we have actually made it back over, so we can also see a retrace back down to touch 23,250, even maybe 23,300 ideally for a bounce, and then make it through. But either way, the range right now is going to be about 23,750 to, well, we can see 23,750 to 23,000 essentially. Maybe 23,250 ideally. Like that's kind of, it's a $500 range, so it's a pretty tight range again, but we'll see what the volume is looking like when the US market opens in a few hours. And if this line is actually in play, well, it's going to be, pretty soon out of commission, and we will be moving it along, something like maybe in fact we already could move it along, and we have something like this, which means, we're playing still in this zone. I don't expect us in the next 16 hours to go below 27,500, probably not even 2,300 or 23,000. That would be really tight, given that these the 45 line, the Gann fan, let's call that the golden pocket, although it's not. I don't know what to call that. I need to find a name for it. That's going to prove to be heavy resistance, and actually the deeper we go into this, it's going to also prove to be pretty, like there's a lot of lines in play down here. So on the upside, we're likely at this stage to be moving much quicker, but it will require that the bears back off a little bit on their selling. So good luck out there, and I wish you all happy days, and we'll see again how things are going and how accurately I have been able to predict this movement simply by looking at some charts with some Gann fans, some fibs, and some volume profiles. I mean, it's not nothing too ecstatic. Actually, I see here, yeah, there's a pretty clear line. We have to stay. So right now we have to stay along this line right here. There's just nothing. There's nothing else but that we need to. That's our short-term goal. I'm going to go ahead and change that to. Yep, that's our short-term goal right now. We're in a descending triangle. It could last quite a while, but it also could pop out at any time. Descending triangles do tend to exit in the opposite direction. So I expect today to be pumpy, even though it looks, as of right now, to be dumpy. So get your trades in. This is not financial advice though, so just let me know what you think and do your own research. Have a fantastic day.